Best possible investors. Today I will introduce the company Bekaert to you. I have made an overview of the things I will discuss today. First, I will tell you a bit more about what the company Bekaert is about. Then financial analysis where different ratios will be discussed. After that, I will talk about some financial news, the stock market, and my conclusion. First, I will address the question of what Bekaert is. Bekaert is a multinational Belgian company specialized in steel wire transformation and coating technologies. Operating in 45 countries, it is a global producer of high-quality steel wire. As a financial analysis, I have calculated some ratios. The ROE reflects the net profitability of the company in relation to the equity provided by its shareholders. The return on equity is increasing, as you can see on the graph. A company with an ROE of, um, of between 10% and 15% is considered efficient and healthy. Bekaert is almost there with a big rise over the last 3 years and an ROE of 9.7% by 2020. The current ratio indicates that whether the company is able to pay its short-term debts with its current assets. Bekaert is in a position to do so as its current ratio has been above 1 for 3 years. This means that the company can pay its short-term debts well. Now I will tell you some financial news about the company. In 2015, Bekaert took over Pirelli steel cord activities, and the company will supply steel cord to Pirelli for many years to come. Steel cord gives strength to the rubber car tire. There are so many cars in the world, so it was a great investment. This was the largest takeover in Bekaert's history and adds around 300 million euros per year to its consolidated sales. Bekaert performed better than expected last year and increased its dividend by 50%. The gross dividend is now €1.50. Here you got the stock market. I have displayed an overview of this month, this year, and also of the last 5 years. There is a clear fluctuation on the graph. There were high peaks up to about €48 per share, but also lows of maximum €15 when the COVID-19 pandemic started. Bekaert shares are looking very strong at the moment. The share had a downward trend since May 2018. A few months later, it was able to recover, but the corona pandemic put an end to it. However, the Bekaert share has been able to recover quickly since the low point in March. Now, however, a small decline is visible again. This is due to the problems taking place in Ukraine. The company does not know how long these will last, and therefore it does not really dare to predict what the future will look like. So, my conclusion is that investing in Bekaert is definitely a good idea. It is a company that focuses on a relatively new business. Their products are used for many things, from medical equipment to the strings of a musical instrument to lifts and car bumpers. The company is operating in more than 45 different countries, so it needs a very strong management team to organize this all. The turnover and various ratios also look good. I think a very important element as well is that they continue to invest in a sustainable future by reducing their emissions and energy consumption. So I would invest in Bekaert, better now than tomorrow.